Hi, welcome to the channel. This is the first part of a multi-part videos. And if you like content, please subscribe and like it. Hi, all. Good evening and welcome to the session. Yeah, this is just a disclaimer. Probably that mostly I really got an advice from one of our friend Prakash. After the first session, he mentioned me put this disclaimer. I'm not a financial advisor, and I'm not supposed to advise directly to either buy or sell legally. So it's just a friendly sessions we are organizing for sharing knowledge across with us. Just before I start explaining things, what you got it from this slide is what all about that we are going to discuss further on that. Maybe you can just share your viewpoint, what you see in these two pictures. Whatever it comes to your mind is okay, just free. Feel free to discuss and then we will take it from there.
Okay, now சொல்றேன். I will tell. First picture is more about retail investor like us going into the mouths of the big fishes, the big investors. And second picture is following the route of the big fishes and how we can also go in that happy path.
Super, super, Guru. That's all. If we know, I think if we know the technique, right? So how to do that? It's basically just Shiva mentioning about that, the fear about the stock market. It's not just no, it's for everybody, whoever is like would like to enter into the market, but the word of mouth and the fear around stock market and then the news channels which projecting the panic sellings and the fear they create, few of them still go and take a risk like going to a lottery ticket, buying it and then trying to see their luck. Few of them try that way and few of them just even though they lose keep continuing and they want to make money from stock market, and a few of them never try it. It's all depends on like what kind of the risk taking appetite we have it like individually, and what is the excessive cash or that we have it in terms of all hard earned money that we should not lose it by just trying it out with any luck or without a proper knowledge. But what is happening mostly today, people see YouTube channels or they go with some a known friend circle where somebody would suggest a stock or they will give you some kind of a trading approach. All this they will try it out, and for a first time they may be successful with their friends, but over a long period of time, let's say the same approach would not really work on all the time in the market, because of the way a market is designed to make sure that the very big investors or like the smart money, it's always works against the retail investors like you and me. So that's what this picture is all about it. The first thing that we have to understand when we suppose, I think we have a mix of audience here, but we have to understand this a very basic a principle, and also we have to keep this in always in our mind, either you do a trading or a long term investment. So this picture talks about one side, left side is a fish just eating the big fish is just becoming like so dominant, and there are a lot of the prey or small fishes that it can eat by what is that actually this fish is going to gain out of doing this is like it's a lot of free money. Once you know the nuance and the technique how to make money, just understanding this principle, then it's just thereafter like it's just today's technology is just with your phone somewhere in the beach and then enjoying your holidays and clicking the buy and sell buttons. That's all you need to do it. It's like once you are really expert and you've been into profitable for quite some time, that's the time I'm advising this kind of an approach. It's like you can be there at anywhere any location, any country, but still you would not be really going to be worrying about your regular incomes by means of going to a job or whatever it is that you are. It's free money. So only thing you need to understand the stock market, how does it works, and if we are able to understand that, we would be able to make a lot of money. It's like not just it finally it becomes how much capital that you are investing or trading once you are master in this technique. So the returns are multifold. It's like from millions or a billions. It depends on like how much that you have with your reach of the free cash or the cash that you want to play around. That's like it is directly proportional to it. So that's where I was just putting a symbolic pictures here, just for that to each one of us to understand. But I'm not assuring that you will achieve it immediately. This is a journey. It's not like you try it out once or twice and then you will be successful. It's a journey that you have to go through it very slowly and understanding each of the concepts one by one in a very deep manner, and then applying that knowledge on your uh, every trade or investment you do it, and then seeing the results by your own. So that's how it is going to be possible. Okay, so that's saying said, let's move to the next slide. Earlier, we have discussed in terms of like what is economic cycle and what is the real stock market cycle. I have touched upon it's always a stock market cycle is moves ahead than the real economic cycle. So I have explained the reasons for it. The real GDP growth or the negative growth of a country, GDP, what we talk about economic cycle. The stock market is always moves ahead of economic cycle because it is always the big money or the big smart money guys would be able to figure it out. A country is going to be a recession or a country is going to be a expansion much before that the real economic numbers can figure it out. So that is how the real play happens. Also, I have explained about the principles, what you need to know. Today, my focus would be on this agenda, not just a theory. Take you through a real chart and then I share my experience and then apply these principles. Okay, what you see here in the slide is I'm going to talk about Baba today. Meanwhile, there are some indicators and there are some terminologies what you see here. Few of them I have touched upon in the last slide, last session, and I'll be talking more about it today as well. First thing, the first bullet talks about a well-informed versus uninformed. When I say well-informed, it means it not just what do you know from the news channel. Okay, it's a information about the company's in-depth knowledge. I mean, the big investors or the big people, smart money or institutional investors or the hedge funds, they know in and out of the company and their balance sheet. Who is the how is the management integrity? They will have all the facts about a company. Those are all called well informed, and also they know whoever the companies the clients and their business vertical and what they make it out of their revenue, and then what is the loss happening and how much is they are putting into an R&D. They know in and out of about a company, and also they know that what is going to happen in the next couple of quarters. Okay, so when the business is really doing great, they know well in advance, right? Basically, if you go to our even our known circles who start a business, it's all based on the person's intelligence and then that person's integrity level and the way the person's talent. We even before that guy is, we would be able to predict will that person will be successful in his business or not. Also, we know one other person just roams around, loses the money every time, and also we would be able to predict. Similar way, all this informations when we take it to a business also, we would be able to really. I mean, these big guys knows that in detailed about that business, but come to us like this is well informed means I'm talking about the very strong hands or the smart money people or institutional investors, hedge funds, and everybody. I group it as a well informed guys. And what is uninformed? Uninformed is like you and me. We just read some newspapers, or we read at some headline, and then we will just look at some websites, looking at like today's there are free websites. There you can go and see some data about the company. This all the knowledge we would get it from the company. We don't know what is inside of the company it is happening, and what is that the real there even though you can, if bit more you spend your time, you will be able to know about companies the future growth plan, and what is their R&Ds, and what is the past balance sheet, and what is their next balance sheet for the next 5 years, their projections, all. We don't get the same information as like the big investors, they have it. You all know that when you have a more information, more data, you are in a well position to take a decision about anything, anything that we do in our life, right? So the same way, like these guys, they have a really 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 good data about the company, and they are the people going to really run these campaigns where they know when to make the stock to go up, and when they want to make a profit, and when they want to again come back and then buy this stock, and then how long they want to be in the stock. Everything they have, all that, it is well planned and well executed in the market. But the point here is, who will be the buyers and sellers, right? They have to be so smart to make others to buy it or sell it when they want to sell and when they want to buy it, right? That's where they will make a profit. Even we go to a normal market, the real price of a product is something, but the broker will set an on top of it some price. And the market makers, local vegetable market or anywhere, they all work as a kind of like one closed circle, and then they can pump the price up, and then they can dump the quantity what they wanted at the top. That is how the given a small markets today works in the villages and vegetable markets or anything. They pre-decide the price, and then they buy it, right? In you go to, like I was giving an example in the last session also, like a vegetable market, like in there are mandi system in India, so where we can see that there are 10 merchants are visiting on a particular day to a mandi. They prefix the price. They will have like each other, they will discuss each other, and then they fix the price of a particular vegetable. And then poor agriculture farmers, will they bring their vegetables to the market, but they will act like they really doing the auction, like a one person from a mandi, they will call the price, and then they will keep doing it, but they will not go beyond above that price. What finally end up with, this farmer has to sell his products to that merchants, so they will accumulate all this vegetables, and then when they go and sell it outside, obviously we know local shop what the we price get it. Vegetable mandi is just 1 kilometer away, but same tomato, you will come to a normal vegetable shop, you will see the 3 to 4 times the price multiplied by the same tomato is selling in the nearby the local retail vegetable shop. Same thing what we have to think here. So these smart people, the institutional investors, they run a campaign. What I'm talking about a campaign here is, they know exactly what price range they want to buy the stock. And then they accumulate, keep, this is called accumulation, keep accumulating the stock for sometime 6 months time frame, sometime year frame, even sometime 2 3 years. It's all depends on like how long they want to run this campaign. Maybe it is very difficult to believe me now, but when I go to the chart and showing this really happening in the market, then you will keep up the, the confidence what I'm talking about. This all you need is I will show you certain charts how this is happening. But the point is, this is how even you local village, and this is the same thing happens at the stock market level. It's all manipulation. This is the keyword, stock manipulation. Okay, this manipulation, if you are able to understand, right, you will escape. You will escape from this manipulation. You will ride one among others, like the big investors. All you need to know is, You don't need a big capital for this to understand. You have to read from a chart. These guys, even though so smart, from the chart in the sense the price action charts, I'll show you to in the upcoming slide. Basically, there are two: volume and the price action. With these two factors, you will be able to find out what is the smart guys are doing on a daily basis or a monthly basis. That is where we will be putting our intelligence. That is where we are trying to really put a lot of effort going forward to learn how that you can predict, how that you can read this chart, how these guys cannot escape from the chart, because it is an recorded data, what is the price of a stock and what is the volume happens on a daily basis. Okay, they cannot escape, they cannot hide it. They will play, still do the manipulation, but they cannot hide it. If we are smart enough to understand that, and they leave always their footprints in their actions, if you are able to understand and then follow it, that is where we will be getting the huge advantage of making a free money. So that's what, like, the idea here. So well informed versus uninformed, what I was talking about, this, the leaving the footprint, right? That is that happens through demand versus supply, cause versus effect, what you see here, and then the effort versus results. I think this is, I have touched in the last session also, but I will talk about more in upcoming sessions. But idea what you see here is, today, like, there are a lot of people are trying to get coming into the stock market, and then they're getting some idea from somebody saying that, okay, you go and use this the MACD indicator, you will make a money. And then they will, somebody would say that, no, 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 you use the moving average, you will make the money. But the point here is, these all called a lagging indicators. What does it lagging indicator means? It's basically they construct these indicators based on the past data of few months or a few days or a few years. Based on that, they construct these indicators, and then they will tell you that the same thing will happen tomorrow. It is well understood that nobody in today can tell you what will be the price of the particular stock tomorrow. That is the reality. It is not at all possible to anybody. As I said earlier, it can be predicted, like, maybe your prediction can go in the probability way that 80 percentage maybe yours right, but still there is a scope that 20 percentage that your predictions can go wrong. So you can't be 100 percentage correct on everyday basis. That is the problem with the lagging indicator. That is where you are also losing the money. Maybe your success 80 percentage of the time, that 20 percentage, that the time that you are going to fail, where you bet all the money that you earned in the past of that 80 percentage success. What you will do, one day you will lose everything. This will keep happening and you get demotivated, demoralized. What you would do, you will change from one indicator to another indicator. From moving average, you will jump to RSI or a MACD. There you, somebody might have told you that, don't, no, 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 whatever you're doing is wrong. You go and switch to this indicator and then try this approach, you will be successful. But still, it is a indicator built based on the past data. Okay. So what we are going to see in this sessions is, we are going to talk about a leading indicators, not a lagging indicators. What I mean leading indicators, that is where the effort versus results would comes into the picture, and then the stock price, daily stock price. This will give you a clear indication in terms of not just the past data. We don't work on indicators, we work on the context of the market. This is the part one. I plan to upload many other sessions in multiple parts. So it would help me if you can subscribe it, so that you will come to know then the moment I upload the new videos. Thank you for listening and watching.